Hey, this is Thomas Wood with Microquant. Once again, we're going to be taking a look at the value charts live trading room trades of the day for March 8th, 2013. Had a great day today. We were up several thousand or over $1,000 on trading one contract at a time. Occasionally we traded two, but only on a couple trades. And that was just on my account. Many of the traders in the trading room were up several $1,000s, especially if they took all the trades that we talked about. Because the majority of them were very profitable. I'll just highlight two of the main markets that we traded, but it will be several trades. We had multiple trades in gold today that all worked out very nicely, both long and short, due to the announcements that came out and gold's volatility. With a lot of volatile markets, there's a lot of very good trading opportunities that present themselves if you know how to trade them right, and that's how day trading can come in handy. We took several $1,000s a contract out of gold with only having to risk a couple $100s at a time per contract. So very, very good day for gold. But the first one I want to talk about is soy. As we all know, we had a crop report come out right at the end of the trading room, so we stayed a little bit longer today by about 10 or 15 minutes. But we were watching soy, and right at the close of the trading room, soy came right down here and touched this daily trend line. And I said, soy looks like a good long opportunity in my opinion. I went long. If you took that long, you're now up around 12 cents a bushel, which is about $550 a contract. You were up about 15 cents. I covered already my long, but that was a very nice long trade right there, right off of a nice daily trend line retest on a daily chart of soy. So the next trade I want to talk about, and this is one that has multiple trades. This is in gold. This is the big picture that we were looking at, okay? If you look at the 60-minute chart, we had two trend lines drawn in gold. We had a lower trend line and an upper trend line serving as support and resistance levels. Now I'm going to drill down because the majority of the trades that we placed were based off of 2-minute charts or very short time frames, but they had to do with looking at these resistance levels and support levels. So first we had the news announcement. And when we had the news announcement, you can see gold sold right off. But what we did is we traded what we call trading the break. So as soon as the market started breaking lower, we shorted as soon as we could with a market order and then took about $300 a contract out to the downside. The next trade that we had is called trading the bounce. And we do that after news announcements as well. Once a news announcement sells off, a lot of times it'll bounce back up into overvalued. You can see right here, gold bounced right back up, overvalued, and we went short again. Now remember as well, this dotted line coming across is that lower trend line. It's representing that hourly trend line that we had drawn. It's going to be resistance. So we bounced right back up to that resistance level and then fell right back down. The next trade that we placed was a long. We went long right here on this bar at significantly undervalued, and that was due to a bullish divergence where we came down. We had equally low prices. So the prices were the exact same low, significantly undervalued according to value charts, but we had a significantly higher low on our indicator for MQ momentum and on the MQ trend index. We had a bullish divergence. We went long there. We covered and reversed this position as soon as we hit that resistance level right here. And then we covered that position. So we went short again right here. So we were long from the low on the bullish divergence, short from testing the resistance and overvalued prices. It came all the way down. We drew this 2-minute trend line coming across. We said, okay, it's coming down to test that trend line. We went ahead and went flat on that position. So then we were flat in gold. The next thing we were looking for is gold looked like it wanted to head higher because it was picking up momentum, staying strong to the upside. It had previously broken just above this resistance that was that trend line. So what we did is we put limit orders in on the opposite side of the trend line, right up here. And as soon as that market broke through, it hit our limits for buys, and we carried that all the way up to the top. And when we had the limit on the buy, as soon as our limit was hit, we put a stop just below the low of the support level. Because that was once resistance, it then becomes support. Stop goes just below there. So if it's a good trend line break, it should not, technically speaking, come all the way back down below there. So it didn't do that. Took off right up to the upside. That got you in around 1569. And we covered all the way up near the highs, up close to that upper trend line. We were moderately overvalued here, we had this downtrend line coming across the tops as resistance, so we went ahead and covered that long there. After we did that, we talked about shorting that long due to a 2-minute bearish divergence where we came up significantly overvalued prices right here with a significantly lower high indicator compared to this previous high. So we were right near resistance. We were significantly overvalued with a weakening momentum and a weakening trend index. We went short there. That allowed you to take out from, call it, even if you didn't have a good fill up at the high, you got in at 1580. That came all the way down to a low of 1572. So another $8 an ounce or $800 a contract. So all in all, a very good day for trading gold. We had a lot of other good trades, including longs and shorts in crude oil and wheat and corn, a lot of different markets. But all in all, a great day. Hope everyone enjoyed it. I look forward to seeing everybody next week. Hope everyone has a great weekend. And until next time, happy trading.